Joining me now is Andy Lipow. He's the president of Lipow Oil Associates. Andy, if nothing else happened, what would the price of gasoline be based on what we're seeing today?
Well, we would be looking as a national average of over $4 a gallon, given that just in the last 2 days, futures prices are up 28 cents a gallon, and that doesn't include what has happened over the last week.
Wow, so you think we're basically already heading to $4 again? Can anything head that off? Would it obviously a sharp reversal in the oil price, but how quickly could we see $4 a gallon show up at the pump?
Well, this is going to happen over the next several weeks. I think that consumers during this week are going to be shocked to see increases of 10 to 15 to 20 cents a gallon as the wholesalers are lifting higher priced gasoline as we speak.
Where do you think the prices will go up the most?
Well, I think they're going to go up the most really across the country. The price rise of crude oil has really been indiscriminate, with WTI rising as well as Brent prices rising. So the consumer is going to feel the pain across the country.
Interesting. And like you said, it's not as if this is just it's not a supply or a pipeline issue so much as just the price of crude. So have you heard anything else about measures at the national level to lower the price? We obviously saw today the coordinated release of, I think, 20 or 30 different countries of barrels from their strategic petroleum reserves. That did nothing to quell the upward move in oil prices today. They've just kept surging higher.
Well, really, the tools that the government can use are quite limited. They could suspend the federal excise tax on gasoline of 18 cents a gallon, and they could suspend the federal excise tax on diesel fuel of another 24 cents a gallon. But beyond that, they're very limited what they can do. I think there's going to be a lot of pressure on OPEC tomorrow, especially Saudi Arabia, Kuwait, United Arab Emirates, to increase their production beyond their agreed upon quotas.
Would a windfall tax, which the European Commission is reportedly considering, if we did that here, what effect do you think that would have on pump prices?
Well, I don't think it's going to have very much effect on pump prices. In fact, the opposite will happen, where producers will slow down on their production. These high prices are really good news for the drilling industry to get more oil out of the ground. But that's the crux of the problem, that we need more supply, especially when the market feels there could be a supply disruption out of Russia.
Sure. Do you know where demand destruction is, at what level for gasoline?
I think we've seen in the past $4 a gallon will do it. And especially when we look at California, where prices are already $4.70 plus, those prices are headed to $5 a gallon. We expect to see demand destruction, especially in California, start reasonably soon.
Yeah, absolutely. Andy, good to have you on today. Thanks so much.